Welcome to Money Confessions. I'm here to help you and the world learn more about money, talk about money. Let's jump in. Confession number 1. Is indexed universal life insurance too good to be true? Hi, I'm 27 years old and my cousin is a life insurance agent. He's been pitching me on indexed universal life insurance and keeps saying these things. You can put in an amount of cash into a IUL, instantly withdraw it, and have that money in hand. But your $30,000 is still in the IUL account and will grow interest over time. So you're able to essentially mirror your money, $60,000. Oh, and it's tax-free. Your premiums won't rise or change either. Am I getting scammed? If this is true, this seems like magic and everyone should be doing it. First, yes, you are getting scammed. Your cousin is a commission salesman for insurance, and he is trying to get you to buy his products to get a fat commission. You're 27 years old. You only need life insurance if you have the people depend on you. So if you're married, you have kids, which neither of those are true right now. You only get term life insurance. Whole life insurance is all commission-based. People sell it to you because they make a lot of money off of it. And if it is so good to be true, then everyone in the world would be doing it. Everyone online would not be telling you to run the farthest way possible away from universal or whole life insurance. So stay away from this. Tell your cousin, no thank you. Tell them when you have kids, you'd be interested in a term life insurance policy, but you're a lot better off putting your money into index funds than into an IUL that your cousin is making a lot of money. Confession number 2. I have $10,000 in savings to put towards a student loan. Which loan would you choose? I have a private loan with $60,000 at 2.7% interest, federal loan at $5,500 at 4.53% interest, another federal loan at $4,400 at 5.05 interest. I have $10,000 in extra savings. In addition to my emergency fund, I'd like to throw out my loans. I currently have a good income and low expenses, so I'm able to put $3,400 a month towards my loans in addition to this $10,000 lump payment. My goal is to be debt-free ASAP. What would you do and why? Well, in this instance, you can either look at the snowball method or the avalanche method. In both of those situations, you'd be paying off the same loans. So snowball method, you'd go after the lowest balance first, which is the $4,400 payment. And then you get rid of the $5,500 payment, which is about $9,900. So that'd be at $10,000. Where the avalanche method is going after the highest interest loan first, which again, in both these instances, the smaller loans, the $4,400 balance is a 5% interest rate. And then the other one has a 4.5% interest rate. In both the situations, you'd be left with a $60,000 balance. That's 2.7% interest. So you want to be debt-free, pay off the 2 federal loans. Those will wipe away about $100 in minimum payments that you won't have, and you can start throwing all that money at the private loans. You want to get out of debt, attack this debt, throw the $10,000 to clear off those 2 loans, and start attacking the larger the student loans. You can do it. Confession number 3, car loan help. I needed advice on a bad car loan situation. Basically, I bought a car I could just barely afford when I was salaried and wasn't excited to pay $384 a month. But I was so desperate at the time and lacked financial literacy and any guidance. A few months after I bought it, I lost my job due to needing too much time off to care for my dying grandfather and went from making $45,000 a year to around $20,000 a year. By this time, it was past all the return before X amount of days options, and I was stuck with the car, bought out of ignorance and desperation. I had a credit score of around 670 and was approved for around $18,000 at 12.5% interest. I am older and wiser now, and I'm feeling the pain of 1/4 of my income to my car payment each month. It is really killing me financially, and I feel utterly hopeless. Does anyone have any advice for how to improve the situation? Keep your head up first and foremost. You're in the same situation a lot of individuals are in when buying a car that you can't afford or life changes and you can't afford the car anymore. There are a few options in this instance. One is try to refinance the loan to a lower rate. Right now you're at 12.5% interest rate, which is pretty high for a car. And the second option is selling the car. I don't know what your balance is left on the car. I would assume after a year, it's probably still around $16,000, $15,000. Look and see what your car is worth. Can you sell it and not have $18,000 of debt? But your really only options right now are trying to refinance it or selling the car. It's not a low interest rate, so just keep your head up. A lot of stuff happening in your life. It sounds like track your expenses down to every penny and see where you can cut back expenses to maybe you can go towards paying this car off sooner, but look at trying to sell the car. So confession number 4, car loan help. I am at a point at which I want to set a goal to better my financial future. I recently bought a 2023 Honda Civic due to needing a reliable vehicle for commuting 50 miles a day. I'm 21 and finished up college in the next 2 years and would like to take control of my habits and financial future. I put down $14,000 in the Civic and owe $15,500 at 5.9% interest. I realize now I should have bought an older used Toyota Corolla or something of the likes, but at this point I would lose money, and the Honda is still a wonderful and reliable vehicle that I would drive into the ground. That leaves me with a choice to aggressively pay down the loan 1 year or invest the money into my Roth IRA. I do understand that mathematically it would be probably be advantageous to invest it due to the compound, but I really would love to be free of car debt as well. I've considered selling the vehicle and buying something in cash. However, I would likely lose some money on that scenario. I've learned my mistake from purchasing something out of my means. I thankfully did not purchase something outrageous or expensive to own, so probably would have played my cards different in retrospect. Just looking for some advice. So you mentioned you want to get out of debt and you realize this is a mistake. So what I would do in this instance is I would be paying everything towards this car as quickly as possible. Don't worry about investing while you're in debt, and the marginal gains on a 6% interest rate loan is not going to change your life, whether you're investing that money or paying this car off. So you want to be debt free. You want to get rid of this car debt. Sounds like you already made that decision for yourself. So start paying down the car debt, be debt free. And once you're debt free, you have more cash flow. You can be throwing that into your investments. You're 21 years old. You have plenty of time on your side. So get out of debt, stay out of debt, and learn from your mistakes. Confession number 5, student loan help. I have $20,000 in student loans. Should I pay it all off at once? Right now, I have enough money saved up to pay it all in one go. The student loan pause gets lifted in a few weeks and interest resumes. So I'm wondering if I should just pay all of mine off now. Yes, you should. You can be debt free tomorrow if you have all the money. So pay off the student loans, be done with it. Never have to pay another dime towards interest. Never have to pay a minimum payment ever again. Free up your cash flow. Get out of debt, stay out of debt. Congratulations, you're in a great spot that you have all this off the table and you can continue to live your life, start building your financial future, and be debt-free. Confession number 6. What would you do to get sorted financially? I recently got settled after moving to a new city, and I'm now looking to focus on sorting out my finances. During the move, I stopped contributing to my 401k for about 6 months as I had other expenses, furniture, etc., but I've elected to start again at 7%. My salary is $88,000. I'm a 29-year-old male. I have $57,000 in my 401k. My monthly post-tax income is $5,200. This is without 401k contributions, and I recently elected to start contributing again at 7% and will also get a 6% employer match. I have $22,000 in savings, $10,000 in a brokerage account, and $10,000 in a checking account. And my debts are $3,500 at 27% interest, $1,600 at 30% interest, a $2,500 401k loan, $4,000 towards my student loans, which my employer pays $200 a month towards this, so I don't really pay anything. My expenses are $1,200 on rent, $200, $300 on utilities, $500 on transportation. I don't have a car, $1,000 on food. I know this is a lot of money I spend on eating out, ordering, and a bad habit. I'm trying to kill it. Well, at first, you have $10,000 in a checking account. So what I would do is get rid of these super high interest loans. I'm assuming they're credit cards that are 27% and 30% interest rates. That's about $5,100. Clear that off the table. You have $4,900 left in your checking account. Pay out this 401k loan. Pay it off tomorrow. You don't want to have that outstanding. And then I have the $4,000 of student loans. I don't know the full details on that, whether your employer paying $200 a month towards it. I don't know what your minimum payment on that as well. You want to better your financial future. The best way to do that is to get out of debt and stay out of debt, out of these bad debts, these consumer debts. So I would, once you have those 3 loans paid off, you have about a little over $2,000 left. You can save that for an emergency fund and then start aggressively paying off these student loans with extra cash flow, including what your employer pays you every single month. So, and get yourself on a budget, start tracking every single dollar that you spend, and you'll be able to set yourself up for success in the future. Confession number 7, car loan help. Should I refinance a car with a higher interest rate? I have a loan for a car and the rate is lower, but our payment would be higher. The original amount is $33,000. Can someone explain how a new higher rate is seemingly better? The first loan had a rate of 6.39%. with a monthly payment of $565, and the balance is $26,222. The new loan interest rate is 10.3%, the monthly payment of $500. Both are 72-month loans. First, you're probably 12 to 16 months into the first original loan payment, so you have about just under 60 months remaining left on the loan, so that payment is $565. The reason that the higher interest rate loan is a lower payment is because you are now resetting that 72 months. So you now would have 6 years of payments left on that versus right now you have 5 years left on the original payment. And you do not want to be refinancing something for a higher interest rate, even though the payment is lower. Sounds great. It sounds like a good deal to open up cash flow, but really you should be paying more money in interest. A 10% interest rate loan is not a cheap loan to have. So please do not do this. Keep the original loan. When you start figuring out how am I going to pay off this loan quicker than the 5 years that's remaining on it, and do not refinance it. Confession number 8, car loan help. I'm making some life changes and trying to figure out the smartest way to manage where to put a lump sum of money for student loans, interest restarting on top of my plan to purchase a car for the first time. My student loans are $24,600, all federal, with interest rates under 5%. I have $15,000 saved for this during the pause and plan to pay it before the interest resumes. This leaves $10,000 in loans left and about a $250 payment. I'm planning on purchasing a crossover hybrid SUV. Most seem to have come down to around the $30,000 mark. I think my monthly car payment I can do around $400 to $500 a month, which means putting down about $7,000 in cash towards the car with around a 5.5 to 6% interest rate. I can take $7,000 out of savings separate from the student loan lump sum. I'm a bit confused because I understand you should be paying higher interest debt first, which would be the car, but then I've heard you shouldn't put too much down on the car. Does this still apply in today's higher interest rate environment? Should I be putting more of the student loan lump payment saved up towards the car to lower the monthly payment? Psychologically, I love to be done with my student loans sooner rather than later. Other stats: I have $15,000 in a 6-month emergency fund. I have $50,000 between a Roth IRA and a 401k. I have $6,000 in my HSA, and I have $32,000 in non-emergency savings, saving towards moving, furnishing my next place, a down payment, future life, maybe kids, etc. I make $100,000 a year, and I'm 28 years old. So you said you want to be done with student loans, but then you're thinking about financing a $30,000 vehicle, and you don't have the cash to pay for it. And whoever told you do not put much money down on a car, that is terrible advice. Cars should only be paid for in cash, and if you cannot afford it in cash, you can't afford the car. You should never be buying a $30,000 car if you can't pay cash, especially if your interest rate is 6%, 10%, whatever it might be. If you have $22,000 in cash that you want to allocate towards the student loans and car payment, I would go buy a $12,000 car cash. That's relieve $10,000 to pay towards these student loans, which would then bring your student loan balance down to about $14,000. Pay those off as quickly as possible. But please do not finance a $30,000 car right now. You'd be destroying your financial future if you're doing that. Buy a car cash, throw the rest of the money towards the student loans, and get it as quickly as possible. Frankly, I would take the $32,000 in non-emergency savings that you're saying you're saving for future events, and I would pay off the student loans tomorrow and buy the car cash. And then you would have so much more money cash flowing that you can save that up super quickly. You can start investing that, and I would want to get out of debt tomorrow. You said that yourself. So get out of debt, stay out of debt. You have the cash to do it. Let's take action. Confession number 9, 401k help. I'm 36, I have no debt, and I want to cash in a 401k to finance a move and start a new life on the opposite coast. I have $30,000 in a 401k, starting a life with my partner on the West Coast. I have no debt, nor does she, but this will go a long way in building our lives together. We aren't having kids. Am I nuts? What are the pros and cons here? I'm returning 15% annually, so it's performing well. Just looking for advice. First, this is a horrible idea. You should never be cashing out your 401k. You should never be taking loans against your 401k. And it does also not cost $30,000 to move across the United States. If you need to be saving up cash for the move, you should not be touching your 401k, and that will just destroy your future, your partner's financial future, and everything in between. So please do not do this. Save up cash for the move. It doesn't cost $30,000 to move across the United States. Don't even buy a house when you've never lived in a place before. Go rent for a year, whatever it might be. But please, please, please do not take a loan out of your 401k to move across the country. Well, that's it for Money Confessions today. Hopefully you learned something. Hopefully you can take some of this advice and apply it to your own life to help yourself get out of debt, stay out of debt, and build financial stability. Ben says like and subscribe. Every like, Ben gets a head scratch. So make sure you hit the like and subscribe button, and we'll see you next time on Money Confessions.